the markets, the way things played out on the market scene yesterday. Your view on the markets at the moment, where attention has been drawn to the fact that we've had the indices touching 2010 highs.
Thank you very much, Alishia. It's always a pleasure. Well, just as you noted earlier, we are seeing a lot of vibrant activity on our market as at now, and this is fairly impressive. And looking at it in terms of either the regional market, the global markets, it seems that the NSE is going to quite outperform most of these other markets. And looking at it in terms of the corporate actions that are coming through, which are fairly strong and fairly welcome, and especially looking at them from the front that we are seeing across the board, from the industrial segment to the commercial and financial, very, very positive performance, and it's very welcome as of now, and hopefully even agriculture, we're going to see a bit of activity.
Well, a lot of the exuberance that we've seen on this market has been waiting to be ratified by banks' earnings reports in particular, and it seems so far to be doing just that, as you've highlighted. Equity Bank showing a 53% rise in pre-tax profit for the first 9 months of this year. What did you make of that figure, where expectations were already sitting pretty high?
Well, thank you very much. Just as you noted, their Equity Bank expectations were very, very high. Actually, I guess being the bank which mostly outperformed most of these others, especially in terms of their novel ideas, in terms of their position in the region, in terms of how they're able to really stamp their foothold in the region. Basically, the performance seems to have a lackluster impact on the market, especially just as you noted there, the share price has not reacted as positive as you noted some of the counters like Cooperative Bank. I guess looking at their loan book, looking at their net non-performing loans, looking at their interest income, basically the future still looks bright in terms of the performance of the bank, and in terms of their positioning as of now, I guess they are very well positioned to continue performing excellently well.
Well, being cited was that numbers were buoyed by interest income, where the bank's loan book has grown 22%. Still safe enough growth, if we can call it that, that's coming to the fore there in your view? Or is it opening up this bank to more non-performing loan risk moving forward?
Well, definitely, just as you noted, one of the problems that our banks in Kenya have been struggling from has been the default risk, which has been fairly high. And as at now, just as you noted there, well, the economy and performance of some of these banks is being buoyed a lot by looking at it in terms of the corporate earnings for most of these institutions, as well as the economic environment, political environment, and looking at it going forward, especially the coming year, as well as the few years to come. Well, it looks fairly stable, but in terms of the NPL, definitely that's one thing that is a major concern, especially noting that Equity Bank, some of their profile in terms of their client base includes a lot of small and medium institutions, and because of that, definitely that's one thing that they might need to really take a caution on in terms of their provisions.
I ask because just last week we had KCB out with numbers as well, and clocking in 23% growth in pre-tax profit, but being noted was that the bank also set aside higher provisions to take care of any unforeseen defaults that may come through later on in the year, and that's to be reviewed in the fourth quarter. I mean, how's the market reading this? Mere precaution or real risk that may well present itself, where net loans and advances for KCB increased 21%?
Well, definitely, yes. It's a major concern, and what we know, especially for most of these institutions, is that the first 3 quarters of the year, they are not very cautious about taking some of those provisions. And definitely, just as you noted there, we are seeing the banks doing double-digit performance in terms of the quarterly earnings. And going forward, especially as we are going into the fourth quarter, we should expect even Equity Bank to be able to be stronger in terms of their provisions, especially just as you noted there. While KCB, in terms of their regional presence compared to Equity Bank, is that their loan book has significantly grown. I guess is because they are trying to adopt the strategy of Equity Bank in terms of their loan book, and also being a bit more liberal in terms of their lending. But definitely, just as you noted there, we should expect, especially as we're going towards the close of the year, some of these provisions to be increased so that they can be able to be in tandem with some of the increased lending.
Another standout feature on equities results yesterday, lower cost to income ratio. Market happy with the current levels, or is there still quite a bit that equity needs to start shaving off?
Well, definitely looking at the ratios as well as the balance sheet for Equity Bank, it still looks fairly impressive, especially noting the fact that it is very, very well regionally bought in terms of how they tend to position themselves. Just recently, they had a deal with the China bank, and because of that, that created a lot of confidence in the bank. And in terms of its liquidity, especially their customer deposit, which has grown significantly, that's one of the things that looks very well positioned for the banks. But well, definitely, James Mwangi is very positive in terms of how he's taking care of the balance sheet to ensure that that it's not exposed in terms of their performance. And hopefully going forward, we should expect them to be very, very careful in how they manage their loan book.
What are you making of its planned expansion into Rwanda and Tanzania by next year as well, given the fact that we've just seen their struggling unit in Uganda only now stabilize?
Well, that's a good observation there. Well, looking at it in terms of the regional expansion, especially for most of these local banks, Kenya Commercial Bank, we've had Cooperative Bank is also considering doing that, looking at other banks which are also trying to venture into the regional market. Equity Bank was quite a leader in terms of venturing into some of these markets. And just as you noted there, this is the time when we are seeing some of those branches beginning to break even as well as beginning to return an income. And there are a lot of risks that come along with getting into some of these markets, especially some of the ones which we are seeing, their markets are not as stable, their central banks are not yet in terms of performance are not up to date, or in terms of their efficiency. But looking at it in terms of going forward, there still is presenting an excellent opportunity for them, looking at it in terms of the saturation point in Kenya. And because of that, we are still seeing as an opportunity for them to take advantage of some of these regions. And hopefully, if the economies in those areas are performing well, some of these banks are going to still reap a lot of gains.
Certainly we'll have to be keeping an eye on developments there as they progress. Very quickly, Cooperative Bank also out with a statement saying that it's raised its stake in Cooperative Insurance Company to 21%. What have you made of that move? Because we know that the insurance sector, specifically in Kenya, is a hard one to crack.
Definitely. Just as you noted, their Cooperative Bank and the decision to venture into insurance, well, it looks like it's some of these things that some of these banks are, some of the strategies that banks are adopting nowadays of being a one-stop shop in terms of stock brokerage services, insurance, bank insurance, insurance premium financing. And because of that, it seems that that's what Cooperative Bank is trying to tap into. But looking at it in terms of the acquisition of cooperative insurance, that is something that has been almost looming in terms of the direction that CIC Insurance has been taking in terms of trying to stamp its foothold in the region. And looking at it in terms of going forward, well, insurance, yes, is quite a tough nut to crack as at now, but looking at it in terms of the opportunities that are there for CIC, especially merging into Cooperative Bank, is still very positive, looking at the unbanked or uninsured population in Kenya. And so looking at it going forward, especially how the market has reacted, it's fairly positive.